Hi guys, this is a question from IGCSE Accounting. It's on clubs and societies, and the question is telling you the financial year of AS Sports Club ends on 30th September. In addition to providing sporting facilities, the club also sells sportswear to members. No inventory is held as all goods are bought and sold to order on a cash basis. So whatever is being bought is paid for in cash, and whatever is being sold is also sold for cash. So the information that they're giving here is the balances at start. So they're giving you equipment. The cost of equipment is 22,000. The depreciation on equipment is 4,400. The subscriptions owing by members is 600. The cash at bank is 610. Subscription owing by members. Last year we've given the service to members. However, a few of members have not paid us. So that is 600. It's our current asset. And then we have insurance prepaid. So last year we paid extra for an expense for this year. So that's $60, and then we have a bank loan that is 7,000. So they've given you a question mark with accumulated funds. So they actually want you to calculate accumulated fund here. So if for example you have you need to calculate accumulated fund. So in a normal profit making business, we have accumulated fund is called capital. So throughout accounting, we subtract liabilities from assets and we get capital. So here we'll say, okay, accumulated fund will be taken out with the same formula, that is assets minus liabilities. And here the assets are 22,000 is the cost of equipment. It's an asset. The depreciation here is a contra asset. A contra asset reduces the value of the asset, so you need to subtract 4,400. Cash at subscription owing by members. So we've given the service and we haven't received the money. So this is an asset. We'll receive the money in future. So you need to add this 600. And then we have cash at bank. This is an asset. You add 610. We have insurance prepaid. Prepaid insurance is a current asset. You add that $60, and then we have a current liability. We have a long-term liability, that is bank loan. So we subtract that. That is 7,000. So this is basically the equation is being applied, assets minus liabilities, and the answer that you get here is 11,870, and that is your accumulated fund at start. So the question now here is saying, so we need this piece of information for the statement of financial position for our for this question. Now, if you see here, the receipts and payments account for the year ended 30th September 2017 was as follows. We have all the money that we've received on the debit side of this account, and the payments are on the credit side. So if you see, there is sale of sportswear. So we are selling sportswear and we're making profit out of it. So we're purchasing sportswear and we're selling it. So if you see, you'll see on the debit side, we have recorded the money that we've received from the sale of sportswear. And if you see on the credit side, that purchase of sportswear, so that means what we have paid for purchasing the sportswear. We have subscriptions, that is 12,540. That is the money that we've received from members for this year. And then we have receipts from open day. So there is an event that the club has organized, that is an open day. So this is like the money that we've received from the selling of tickets of the open day, and then we have expenses of open day. Then we have on the credit side, we've paid rent for the sports ground. We paid general expenses. We've bought a new equipment that is for 8,000. We've paid for rates and insurance. So we'll use all of these for the income and expenditure account. But for the first part, they're asking you to calculate subscriptions, and if you see the information at end at 30th September, subscription owing by members amounted to 240, and subscription prepaid by members amounted to 180. So we need this piece of information to actually calculate subscription. So if you see at the end of the year, there were a few members who did not pay the subscription, that is 240. And then there were a few members who paid extra for the next year. So that is 180. So at the end of the year, this is your current asset. you're going to receive the money in the future, and this is your current liability because you've got extra for the next year and you need to provide the service in the future. So if you calculate subscriptions, so they haven't specified what format you need to use to calculate subscription. However, the best thing is to make a subscriptions account because it has a very simple general rule that you need to follow for all income accounts. So if you make a subscription account here, so you have on 1st October 2016, you have an owing brought down, and that is 600. It's given in the question. And then so the rule that we follow here is OPPO. So we start debit side owing brought down because it's also your current asset. So that is why it is coming on the debit side. And then obviously if the brought down is coming on the debit side, the carried down will come on the credit side. Owing carried down will come here. And this will be 30th September 2017. Owing carried down is 240, owing at the end of the year. Then we have a prepaid carried down on 30th September 2017. We have a prepaid carried down, and that is $180. And then the money that we're receiving in the bank account is 12,540. So we write bank here and we write 12,540. So if you see, how do you remember this? So whatever is coming on the debit side in the bank account will come on that. The same thing will come on the credit side of the other account. तभी तो डबल एंट्री पूरी होगी. मतलब अगर बैंक डेबिट हो रहा है तो इनकम क्रेडिट हो रही है. ठीक है. और हमेशा ये होता है जब इनकम आती है तो बैंक जो है वो ऑब्वियसली द मनी इन द बैंक इज इंक्रीजिंग. So the other account that is being credited here is the income account. So bank will come on the credit side in the subscriptions account. You need to just remember, okay, you're following the rule OPPO, and then you can just put the brought downs and carried downs, and then the money that you're receiving in the bank, it's on the debit side in the bank account. So it'll be on the credit side in the income account, and then you calculate income and expenditure. Just here, income and expenditure. And this is what you are trying to find out. So this is basically, I'm putting a star here. We found out this, how we total the credit side that makes up to 12,780. And we total the debit side, so 12,780 minus 600 minus 180 gives you 12,000 that should be charged to the income and expenditure, and the date here should be 30th September because we are going to make income and expenditure on the last day of the year. So that's about it. It's a very easy account, subscription account. It just follows the simple rule OPPO, and then you need to know, okay, where do I write bank? The money that we're receiving should be written on the credit side in the income account because it is debited in the bank account. And then you transfer the money and transfer the income to the income and expenditure. And wherever, so in the income account, wherever bank is, right opposite of that, we have income and expenditure because we transfer the income to the income and expenditure account. So here the income and expenditure account, because the income account will be debited and the income and expenditure will be credited. So whenever the business is making profit, making income, so incomes actually increase profit. So here when we make the income and expenditure account, we need to find out, okay, we have selling of sportswear. So selling sportswear, whatever money we're receiving from sportswear minus whatever we're paying for purchasing sportswear gives us the profit on sportswear. And then we have a subscriptions here. So we are getting 12,000 as an income. 12,000 is our income for subscriptions. Here we have open day. So open day, if you see the amounts for the open day, the money that you receive for open day is 4180, and the money that you are paying for expenses of open day is 5250. Hence, it's a loss on open day. So we'll not treat this as an income because we've spent more on open day as compared to what we have received. So we'll put that in the expenditures section of the income and expenditure account. So but it's very simple. So we need to start with incomes. And what we do here is that we simply write, okay, सबसे पहले तो हम लिखते हैं subscriptions. Subscriptions आपके हर सवाल में होती है. So you need to know that in every question you will find subscriptions. So subscriptions is 12,000, and then we have profit on sportswear. Profit on sportswear is basically you need to subtract two values. Sale of sportswear is 3,510 minus purchase of sportswear is 2,410. And the answer to it comes out to be 1,100. So if you see the total incomes here is 13,100, and I know we don't have any other income because if you see the debit side of the bank account, you'll see, okay, we're making money out of selling sportswear, we're making money out of subscriptions and receipts of open day. If we had receipts were more than the expenses of open day, then we could have treated that as an income. But the case is opposite. So then we write the expenditures here. So we have a loss on the open day. So we simply subtract 4180 minus 5250. So at 4180 minus 5250, we get how much? We get 1070 as loss. Then we have other expenses. So we need to see the credit side of the bank account. What is rates and insurance? So we have rates and insurance. And if you see the question, we do have an opening prepaid in insurance, and we don't have a closing prepaid or an owing in insurance. So we don't need to worry about it. We just, if you make a small account at the side, we follow this rule, BOOP, for expenses. So for example, this is called, okay, rates and insurance. And there is an opening prepaid of $60. So opening prepaid comes on the debit side in the expense account. And if you see what we are paying here is that we are paying 1,500 for insurance. So if that comes in the credit side, on the credit side in the bank account, we need to write it on the debit side in the expense account. So what we take to the income and expenditure is 1,560. And we write it here, 1,560. Then we have other expenses too. We have rent of sports ground, and if you see, there is no opening prepaid or owing, and there is no closing prepaid or owing in rent of sports ground. So we just take it as it is, that is 1,800. So you write rent of sports ground. And that is 1,800. Then we have general expenses. We don't have an opening prepaid or owing or a closing prepaid or owing for general expenses. So we just write general expenses as it is. And we write the amount that we've paid for general expenses, that is 2,640. Then we've taken rates and insurance, we've taken expenses for open day, we've taken rent for sports grounds, we have taken general expenses. Now, in all the questions, it's very important to actually incorporate depreciation. So in questions of clubs and societies and incomplete records, you'll always find that depreciation is what you need to find for income expenditure. and income statement in case of incomplete record. So depreciation on this depreciation is on equipment. So we write depreciation equipment, and if you see, how do we calculate depreciation here? So at the start of the year, we had cost of equipment 22,000, and we had 4,400 as provision for depreciation at the start of the year. Now, what they're saying is that the equipment is to be depreciated at 20% per annum based on the cost of equipment held at the end of the financial year. So we had 22,000 cost of equipment, and we bought a new equipment that is for 8,000. So that totals to 30,000 multiplied by 20%. Multiplied by 20%, yes. So multiplied by 20% will give us 6,000 as depreciation of equipment. So we just had to calculate depreciation on cost. So we added cost at the start of the year plus the cost that the cost of the new equipment that we bought, and then we add both of them and multiply it by 20%. So we have one more expense here that is there. So they haven't paid the loan interest. It's completely outstanding, and it's 5% per annum. The loan here is 7,000. So 7,000, 5% of 7,000. So you'll write loan interest here. And you write 7,000 multiplied by 5%. So that gives us, okay, that gives us 350. So yes, so we have 350 here, and then we don't find any other expenses because we've taken all the expenses. How do I know that? Because if I see the credit side of the receipts and payments account, I have incorporated everything, and I've also incorporated depreciation, plus I have also incorporated the information of 30th September, that is for interest. So that's about it. Now we can total the expenses. The total of expenses here is 13,420. So when you do incomes minus expenses, so 13,100 incomes are less than the expenditures. So we have a negative 320 here. That's a deficit. Deficit is also called excess of expenditures over income. So it's like a negative 320. So we have spent more than what we've received for this year. So in part C, they're asking you to make a statement of financial position. And statement of financial position, obviously you've done all the hard work now. It's very easy now. So statement of financial position, you start with non-current assets. So we have one non-current asset, that is equipment. So equipment, the cost of equipment at the end of the year is 22,000 plus 8,000, that is 30,000. And the depreciation, the provision for depreciation. So the first column tells you the cost, the second column tells you the accumulated depreciation, and the third column gives you the net book value. So in the second column, we have 4,400 that is already there as provision for depreciation at the start of the year. So that was accumulated depreciation at the start of the year. Then we have during the year, we also added another depreciation that was 6,000. So 10,400 is the total depreciation at the end of the year. So 30,000 minus 10,400 gives you 19,600. So that's the net book value of the non-current assets at the end of the year. Then we have we have to write current assets. So current assets, how many current assets do we have at the end of the year? So we have subscriptions owing at the end of the year, that is 240. People we've given the service, but our members haven't paid us. So subscriptions owing at the end of the year. So we write subscriptions owing at the end of the year is 240, and we don't have any other current asset because we don't have inventory. So there's no closing inventory. We don't have a positive balance in the bank. If you see, this is the negative balance carried down on the debit side means the balance brought down on the credit side, which is an overdraft, which means we have paid more than what we have received. So that is a negative balance. So we don't have any other current assets. So if we add both of these, we get 19,000. 840. And then on in the rest of the statement of financial position, you need to write, okay, the first part of the statement of financial position gives you the total assets. The second part is capital plus liabilities. So we'll start with accumulated fund at start. So accumulated fund at start is, we had calculated it in the very beginning. The accumulated fund at start is 11,870. And then we have to subtract the deficit because of course we'll have to, a deficit will decrease our accumulated fund. It's a loss, and a loss decreases capital. So deficit को minus कर देंगे इधर, 11,817 minus 320 will give us 11,550. That is accumulated fund at end. उसके बाद हमारे पास एक लॉन्ग टर्म लाइबिलिटी है. लॉन्ग टर्म लाइबिलिटी को हम नॉन करंट लाइबिलिटी भी कहते हैं. नॉन करंट लाइबिलिटी is a bank loan here. So the bank loan that is repayable in 2020. So that was 7,000. And then we need to write the current liabilities. So current liabilities, we have a prepaid subscriptions. किसी लोग मेंबर्स ने हमें पहले से पे कर दिया है सब्सक्रिप्शंस के लिए, तो सब्सक्रिप्शंस प्रीपेड is our current liability, that is 180 at the end of the year. Then we have a bank overdraft. So bank overdraft here is, if you see the bank account, you'll see the bank overdraft. It's the ending balance, that is 760. So 760 is the bank overdraft here. And then we have one outstanding loan interest. So loan interest outstanding is what we haven't paid, the complete loan interest that we were supposed to pay. So that's 350, an expense outstanding in the current liability. So if we total this, we'll get around, okay, we'll get so we 1290, this gives us 1290. So now if we total 11,550 plus 7,000 plus 1290, that will give us 19,840. And then our balance sheet statement of financial position will balance at 19,840, which means we have done, what we've done is all of it is correct. Yes, we've applied all the rules, so we can say it's correct. The next part, the last part here is slightly theoretical. It is saying, okay, explain why the outstanding loan interest should not be credited to the loan account. So loan is like a long-term liability. So we say it's a non-current liability, and it is the loan itself is a capital receipt. So it's a capital receipt. So whenever we are receiving a loan, it's actually written in the statement of financial position, and it's a separate account. It's a liability account. However, the interest expense is an expense account. Expenses are revenue expenditures, and revenue expenditures are also taken to the income statement. So you have to tell, okay, interest is an expense, and the loan itself is a non-current liability. So non-current liabilities are kept separately in separate accounts, and expenses are completely different. They're kept in separate accounts. So that's about it. That's about it for this question. I hope this helps. Thank you.